Good afternoon. This is Rich Morrison, and welcome to my latest edition of the Thinking Cap, entitled Guten Tag, Good Day. I've just returned from several days overseas. My wife and I went through Germany, went through some other countries in Europe as well, ended up in Iceland, just got back into the States last night. So, wanted to spend a little time talking about the markets, giving you a little update on what's going on and kind of what we're seeing here since been out of the saddle for several days. So, big story, of course, over the last several weeks has been tariffs. You can see the latest headline here from the Wall Street Journal this morning. President Trump saying this morning that the United States will consider slashing the tariffs on China instead of the 145% number, shaving that back maybe into the like 60, 65 levels, something like that. And you can see what's happened to the stock market. We see a little bounce here into the early morning hours here, April 23rd. Things kind of settled back a little at the end of as we went through the day. But a relief to a lot of traders, a relief in a lot of markets. And we saw that in several markets attributed to China here today. Looking at what's happened in the stock market over the last few months, it was kind of a quiet, steady run through the winter, and then we started getting the tariff talk, and then you saw a lot of volatility come into the market late March all the way through the month of April so far. And I would think that's going to be the name of the game here going forward. We're still going to see more volatility, but today the S&P gapped higher. We've traded back above the 20-day moving average here in the nearby contracts. So even though we didn't finish with, looks like with all the gains we had early on, still some positives. So we'll see what happens going forward. The U.S. dollar has been hit pretty hard with the tariff talks, and it was not a good time to be traveling to Germany because the dollar versus the euro shrank quite a bit while I was gone. And so kind of see that here. Our conversion factor was kind of working against us on the trip. But we did see the dollar bounce back a little bit today, buoyed by the tariff relief talks. The crude oil market, of course, a lot of oil price has been taken out of the market, I think, because of fear of slowdown in world economies. You can see the big fall that we had at the beginning of April fell about $17 a barrel. Back up about 50% of that move, back up into the low 60s now. But, until we get some resolution in some of the tariff talk, it's going to be hard to see the oil market rally. And, I've talked about this throughout the winter, especially that oil tends to be a leader in the commodity sector. And so if you're looking at corn, soybeans, wheat, cotton, any of the other commodities that are attributed to usage, they tend to see oil as the leader in the complex. And so kind of keep that in mind. And then lastly, gold. Gold is a safe haven. When people don't know where to put money, you stick it in the gold market. And so, we're seeing that lately. We saw gold trade over $3,500 yesterday, back down sharply today, though. Again, maybe a risk on in the stocks, taking some money back out of precious metals. So certainly the macros have shown much, much more volatility than what we've seen in the ag markets over the last several days. Now, switching into the crop markets, and want to give a plug to our NAU crew that putting out the planning progress maps. Check these out on social media. I think we're also going to have a mailing come out as well here in the next couple of days, but some pretty good information on these maps. We get these planning progress reports every Monday afternoon. And so here's the latest corn numbers. The blue states running a little ahead, and you can see in the numbers the percent state that's been planted and the percent ahead. The red states have been running behind, and you can see where we're at there as well. And certainly it's the areas that have gotten the biggest rain over the last couple of weeks running on the lower side. Overall, U.S. planning running a couple points ahead on corn. As far as the market goes in corn, since I left, we're still trading about 15, 20 cents higher than we were on December corn when we left back at the beginning of the month. We've rallied corn sharply. Part of that was a USDA report here in April that lowered the ending stocks. That was kind of expected before we left, that we were expecting USDA to have to do that based on the corn sales that we've seen. Some of that, I think, due to excessive rain that had people believing that planting was going to be a little tough getting started. and that we could end up being a little bit late. How are we going to get 95 million acres of corn planted? Well, Monday's report kind of told us that we're running a little ahead getting going. And so we've seen the corn market take a couple of steps back here as we've traded Tuesday and Wednesday. So we'll see. We found support, it looks like today at the 20 and the 100-day moving average, right here around 452, 453, bounced off that, even though we finished the day lower. We're still sitting in about the middle of the trading range from the end of the March low back to the April high. And you'd have to think that all things considered, with all the tariff talk and stuff, that the corn market has performed very well during that point in time. So, as always, I would encourage folks to get your offers out there on the table. One of my starting points, if you want to make some more sales, I like the base price on the insurance policy as a place to target, trying to get selling above that. We didn't quite get there. We got within a half cent of it here on this move. You can see here just in the last couple of days, the RSI nearly touched 70. Stochastics have turned upside down, crossed over. So the best I think we can hope for, being a Wednesday, as I'm recording this, is we can get a sideways trade into the weekend, maybe hold the support and try to build as we go potentially into next week. We do have the second week of May. We'll get the next supply demand report from USDA. That will also include some new crop numbers for the first time. Even though we saw some projections back in February, we'll actually see some balance sheets here in the May supply demand report. So we'll see what happens there. But again, put some targets in. If you look at the historical tendencies of December corn, we're right there. Here we are, end of April. Over the next 60, 90 days, this is the time we need to be pricing corn. Usually it's the time of the most uncertainty is when the market gives us our best opportunities. And so take advantage of the rallies as we get them, because once the crop gets made, it takes a while before we get the market to go back. Looking at soybean planting, much of the country running a little bit ahead of normal. Again, the only states to the east where we had some excessive rain. But beans, it seems like every year guys get planting earlier and earlier and try to put the bean seed in the ground. And so we're off to a pretty good start. I think 3% ahead of normal on the national level. If you look at the chart on November soybeans, again, it's been a really good run, I think, considering all of the problems and tariff talk with China. The fact that beans have pushed back up above several of these moving averages, but kind of like we saw back in early February, the 200-day moving average continues to give us fits here, and that's right around just under 1040 right now. That said, here today, we closed higher. We traded above the 9, the 100, the 50-day moving average, that cluster all around 10 and a quarter. So, as long as we can hold that, RSI and stochastics are neutral, maybe a little toppy at the moment, but as long as we can hold that, I think you've got some decent opportunity for a seasonal type move to the upside. And you want to take advantage again over the next 60 days. This is the time of the year where you tend to see the markets trade a little better. So we'll see if we can get some, maybe a little bit of a push here and take advantage of it, be making some sales. In wheat, the spring wheat planting numbers running just slightly ahead of average. You can see here by state. Minnesota, Washington, a little bit behind. The other northern states running quite a bit ahead of the normal pace. Looking at the spring wheat chart, again, through the first 2 weeks of April, wheat reacted pretty well despite the problem that we had with the tariffs. Now, we have backed off the last 2 or 3 days, and we'll see that in winter wheat here in a minute. I think a lot of that has to do with the progress. A lot of it has to do with improved moisture situations in dry areas that is pulling the September Minneapolis contract with it. The 200-day moving average was the top again here recently. So, if we push back up around 640, 635, probably not a bad place to trickle off a sale. And seasonally, over the next 30 days or so, 60 days, this is the time of the year we tend to see spring wheat trade to its highest levels. In Chicago, July wheat, we've pressed lower here all 3 days this week so far. Again, improved crop conditions, I think probably part of the reason for that. Just no big story. Plus, talking about resolution with the war in Ukraine and China, or excuse me, Ukraine and Russia, and that really takes one of the potentially bullish situations off the table if that happens. And the same thing with Kansas City wheat. In fact, we traded to a new contract low here this morning in the KC July wheat contract. So I can't really say there's any targets here to the upside. I guess, you get back up to the 100-day moving average, maybe these recent highs that we had here in April. If you got to get some wheat sold ahead of harvest, probably your best idea, best opportunities. But right now, RSI and stochastics pretty oversold in the winter wheat contracts. And then finally, in cotton, you can see where we're at here getting started, running slightly ahead of average. Texas, of course, the big driver, running right at 16%. You can see we kind of got a mix in some of the other states as far as being ahead or behind. But the big story in cotton today was China and the president's comments regarding a resolution of tariff, or at least a lightening of tariffs. And so that's given a little boost to this market. The 200-day moving average up at 70.75 looks like a lid here. So not far from that right now. And the technical indicators probably indicate we're starting to get towards toppy. I don't know that I'd panic sell just yet, but probably look back to early December's high at 72.71 as a first target to be making a sale. One thing to keep in mind, we are trading above the insurance price. So any sale you make improves basically your guarantee for your crop this year. Seasonally, we're there right now. This is the time of the year where we tend to see the market give us our uncertainty, give us our rallies. So maybe we get something here shortly to take advantage of. Looking ahead, weather-wise, these are the latest from Empire Weather. The next few days, in fact, the next couple of weeks, supposed to be above normal on temperatures. So if we get some drying windows, I would certainly think we're going to be planting a lot of crop when we get the chance. Now, that said, over the next 7 days, much of the country, especially in the western belt, expected to get heavy rains, which probably helps the winter wheat crop, I would think. As you get into hard red winter wheat country, maybe not as much to the east where we had more over the last couple of weeks. The 10-day outlook kind of mixed on this map, although National Weather Service talks about above normal precipitation for much of the country. Looking ahead, June, July, August, the latest report or the latest forecast out last week still shows above normal temps, still showing below normal precipitation in the western half of the country. So that's a concern, I know, to folks in the Dakotas, the plains, even in the western corn belt. So we'll keep an eye on that, see if there's any changes. The latest drought forecast, also released last Thursday, continues to show a similar situation of that western territory getting dry. So the rains over the next 7 days will be very welcomed out in that part of the world. Hopefully replenish subsoil moisture and allow the crop to get up and rolling, and then we'll see what happens. Maybe the forecast changes as we go forward. So with that, thanks for listening to this Thinking Cap. I'm getting back in the saddle, as I mentioned, so I want to give you an update on the markets, and we'll talk to you again real soon.